Hey, it's Clay, and this will be a video chart on ticker symbol AMPE. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's time frame broken down into 30-minute time slices. I like to do this time set of parameters just because it does a good job of telling the overall story of the price and then makes mapping out levels of support and resistance a bit easier to see. I don't mean to state the obvious or rub salt in the wounds or anything like that, but yeah, pretty rough day with the gap down. And then on top of the price action, you look down here at the volume, and by far the biggest volume this chart has had for quite a while. So quite a few eyeballs are on this one, so let's map out some levels of support and then some potential areas of resistance. The one part that really stands out to me is basically the pattern here that has formed, and that's, kind of a poor man's downwards channel. And yeah, it is a downwards channel, but the one portion that stands out is where the price is currently located within the channel. And that's, flirting down here around the bottom portion of it. Meaning if the price can kind of follow how it's occurred acted in the past, and you can get some sort of bounce to the upside, that could be, worth some decent profits. Sure, it may not be a huge distance, but remember, when you're talking about a stock that's, below $1, percentages can add up relatively quickly. And that's only, planning on the price going up to the top portion of the channel. I mean, if the price were to somehow break through it and then get some more continuation, then of course, the percentages are going to add up that much faster. Now, am I saying that it's guaranteed to bounce off that lower trend line? If only trading were that easy. Now, would it be shocking to see some sort of bounce? No, that would not be shocking at all, but myself nor anyone else can sit here and say that a bounce is for sure happening because it's near that lower trend line. There is no for sures because that would be the same as a guarantee. And if you're not aware, then I'll tell you right now, there's no such thing as a guarantee in the market. And that's why risk control and risk management is, so important. But that's what does definitely create an interesting setup here is you have this final 30 minutes, a nice little surge of volume, and, just pretty much a small, tiny little doji candle at the bottom of this trend line. So we'll see if there is any sort of bounce through it. If it can get through that trend line, the next level of resistance to keep an eye on would be right up there around 85, 86 cents. But we'll see what happens with it. Again, if you are new and you don't like stop losses or you don't honor stop losses, well, I mean, you shouldn't even be trading in those situations. But that's a whole nother video. But this is definitely for more of the disciplined trader that knows how to, analyze risk, control risk, manage risk, because, from a risk reward perspective, if you get a bounce, the reward could definitely outweigh the risk. One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.